let's talk about tax-free savings accounts, TFSAs, and what it means, how it works, how you need to use it, and what actually it gives you as a Canadian resident or a Canadian citizen. To make it super simple and to make this video as easy to grasp as possible, I decided to make it a one-sentence video. So basically, TFSA allows you to stash extra cash for almost about anything. You can save it for your rainy day, or maybe you want to buy a house with it, or just for your retirement, right? And all the gains or dividends that are going to be coming out from your TFSA investments are going to be tax-free. To make it even shorter, TFSA actually allows you to earn money without paying any taxes on gains or withdrawals. At this point, you know about 90% of what actually TFSA means and how it works, but let me talk about this 10% of TFSA's hidden things and features that you need to know, that everyone needs to know in order to use TFSAs properly and gain the most out of them. As this type of account is one of those that you must use if you live in Canada, if you're a resident, or if you're a Canadian citizen. So I broke down this video into 5 different sections. To start off, let's talk about a little more detailed explanation or description of what TFSA actually is. So TFSA is actually a tax-free savings account that is funded by government. It's a registered account by them that was actually created in 2009. So if you were at least 18 years old in 2009, then you can gain the max limit possible up to date. What it means is that if you haven't contributed to your TFSA since 2009 and you were 18 years old in 2009, then today you would be able to contribute $81,500 to your TFSA account and start seeing all the gains tax-free, all the dividends tax-free that will come out from your investments from this TFSA account. And how cool is that? Just think about it. You can stash around $80,000 into your TFSA account and gain tax-free money from it. And if you're a super safe investor and you're trying to get around 10 or 15% from your investments every single year, you would be able to live off this money at some point in the future. This is the best and the first tool you want to use when you're starting up your investments. The first account you want to open up is TFSA, because you're going to be getting all your gains from your investments tax-free. So I mentioned a little bit about the contribution limit. So why it's $81,500? Because every year government actually sets what the limit of contribution to your TFSA for that year, and it actually stacks up. So if you haven't contributed since 2009, then you will be able to get all these limits together and contribute at once, right? For example, for this year, 2021, the contribution limit was $6,000. And for the next year, 2022, it's gonna be also $6,000, right? So if you are maxed out on TFSA today, then on January 1st, you can add another $6,000 to it, and you're going to be set to go until the next year. There is a catch there that you can be fined for over-contributing to your TFSA account. So if you contribute more than the limit you have, then you're going to be charged 1% fee for every $1,000 over-contributing every single month. So say you over-contributed $1,000 in January, right? Then you're going to be charged 1% on that $1,000 end of January. And then if you haven't withdrew your money from your TFSA in February, then you're going to be charged another 1% fee for the same amount at the end of February. So this is basically what it means to contribute a little more than you actually allowed to. So you need to watch out for that. Only contribute what you actually have limit for and do not go over it. So that opens up another question for our chat today: how to use our TFSA. So basically you want to contribute up to a limit every single year and have your TFSA account as a priority number 1 account where you want to put your money. Until you max out your TFSA account, do not put money anywhere else. Only exception here is that we're going to be talking about taxes, as I'm keep saying that TFSA is tax-free account. It's 99% true. There's a catch, 1% catch here, that if you are investing into foreign stocks or ETFs that pay dividends, then you're going to be required to pay this non-resident withholding tax for those dividends that are going to be coming from these foreign stocks, from foreign exchanges. So say you contributed to some company on the New York Stock Exchange or NASDAQ, and you used your TFSA account. Then whatever the dividends are coming out from those stocks to your account are going to be charged of this non-resident withholding tax, which is going to be approximately 25%, which is a lot. So do not hold your foreign dividend stocks on your TFSA account. Just use your RSP account for that, because it's going to be tax-free there. So this 1% catch for the taxes of TFSA. Another thing to know about contributions is that you're actually allowed to withdraw money from your TFSA account, and there are no fees associated with that. You can withdraw the whole thing anytime you want. There's the one thing you need to know about before doing that is that when you actually withdraw your money, then you need to wait for the January 1st next year before this room actually clears out, and then you can actually contribute back to your account. So say you contributed up to end of 2021 $50,000 to your TFSA account, and today say it's December 26th and you decided to withdraw all of it. So you withdraw the whole $50,000. Then you would not be able to contribute this $50,000 back to your TFSA account until January 1st. In the best case scenario, if you were 18 years old in 2009, then you would still be able to contribute around $30,000 until January 1st. But this $50,000 thing that you withdrew will be locked out until January 1st next year. So basically until January 1st, 2022. And then you would be able to contribute back all of it. So that's how it works. Make sure you are not over contributing to your TFSA account, and you do the math whenever you actually withdraw something and you need to wait out for next year or not. That's why one thing to consider before the year ends, and I talked about in my previous video where I go over all things you need to know and consider before the year ends from the financial, personal finance standpoint. So one thing for TFSA is that you actually need to decide for yourself if you want to withdraw something from your account so that your room is going to be opened up again on January 1st. It's different for everyone, so make sure you are covered and you know what you're doing. The last piece I want to cover is TFSA planning, what I do and how I make sure that my TFSA stays on top of things, right? So the very first thing I do for my TFSA account is I want to max it out for the limit of this year. So I want to contribute as much as possible up to the limit I'm allowed to contribute to my TFSA. And this is my priority number one in terms of all other accounts. The only exception here is that if I want to contribute to some dividend stock on the foreign exchange like New York Stock Exchange or NASDAQ, I'm going to be doing this on my RSP account. The rest of investments as a priority goes to my TFSA account. And the second planning I do on my TFSA account is that at the end of the year, I sort of go and see what my investments are and do I need to do any sort of rebalancing, do my risks change? So I basically make sure it stays on top of my plans, on top of my life events and all that. That allows me to be better planned for future me. So that's my whole plan, and I hope you have your plan as well lined up. Tell me in the comments below what are your thoughts and what you are doing with your TFSA accounts, what stocks you are holding there, what are the best stocks out there that you hold there, and I'll see you around. All the best out there. Cheers, bye.